It's time we talk a little bit about AMD because everybody's been talking about Nvidia, right? For the last, 2 years now, and rightfully so. Nvidia is a tremendous company. The growth rates there, the free cash flow that company generates is out of this world. And so the next player that everybody's been focusing on is, of course, not Intel, because Intel has had, their struggles and their issues, although I'm an Intel shareholder. The next player that everybody focuses on is, of course, AMD. If you missed Nvidia, then you should pick AMD, right? That's what we've been hearing for quite a long time, although I've explained many times why I don't see how this makes sense, since Nvidia still grows extremely fast compared to the size that they are. While AMD, you would think that with the premium that this company is getting, plus being the so-called number two, you would have thought that company would have grown much quicker than it did, right? And would become more profitable than it currently is. So yeah, I missed Nvidia, so I should buy AMD. To me, that just doesn't make much sense, but okay. We'll compare that all, we'll talk about all of that in this video. Let me start by showing you a major overview here of AMD, the performance of the stock. Year to date, bad performance. It's down close to 7% year to date. At one point, at the start of this year, the stock was up 43% or so. So yeah, quite the underperformance since then. It has a market cap of $222.7 billion. So yeah, much bigger than Intel currently, but of course much smaller than Nvidia. Looking at the forward PE, we're going to have a look at that compared to its mean in just a second, but just so you see it right now, it's 30 times. So you must say, oh, that's super expensive, right? But you will see when you will look at the price earnings to growth, you will understand why it's not that expensive. If we look at the analysts' expectations and the growth rates here, top and bottom line is of course expected to grow much faster. For fiscal 2025, it's expected to grow 54.4% year over year, while sales should increase 27%. And then in fiscal 2026, same thing, bottom line, EPS here growing quicker than sales. Currently, if we look at the average analyst price target, that sits 34.6% higher than the price we're at today. And then looking at the pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, you can see that forward PE, EV to EBITDA is lower than the 5-year mean. Price to sales is about the same. Price to free cash flow, that's in the last 12 months, which wasn't that great, which is why it's so high. But you will see what the market is, or the analysts are expecting free cash flow to do in the coming years, much, much better. And then price earnings to growth, 0.71. Anything under 1 by definition is supposedly undervalued. So 0.71 for AMD, the so-called number 2 after Nvidia, that's not bad. So let's dive a little bit deeper, shall we? And by the way, tomorrow's video will be on Nvidia, the recent struggles, why billionaires are selling, and why you should or you should not buy Nvidia right now. So stay tuned for that. Hit the subscribe button, like, do all of that. We'll really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's start with what the analysts are expecting this company to do with regards to free cash flow. So we can see that free cash flow in the last 12 months is $1.556 billion. But if we look at what free cash flow is expected to be for the fiscal year 2024, it's expected to be more than double that number. And that number is expected to grow by 86% in fiscal 2025, and then another 36.9% in fiscal 2026, reaching $9.376 billion. These are important metrics when we're going to do the reverse DCF at the end of the video. Now, how is this possible? How are they suddenly going to grow free cash flow so much? Well, it's this lucrative business that you can see here in purple. That's the data center revenue. Data center revenue since 2020 has grown by 552.9%. Client revenue, which is the second largest segment here, has only grown by 19.5%, and the gaming one by 23.8%. If we look at operating income, well, it's quite clear. Data center, we've seen that with Nvidia as well. Highly profitable segment of the business. Now, if we zoom out a little bit more and we compare it to Nvidia and Intel, free cash flow wise and gross profit margin. So NVIDIA in a league of their own, right? That's the green one right here. That's gross profit margin, 75 point something percent in the last 12 months. Insane, right? Insane. Then free cash flow wise, that's also in the last 12 months. I mean, this thing since Q1 2023 has only gone up and up and up, has basically exploded. The problem that I had with the argument that, oh, you missed NVIDIA, you should buy AMD is this basically, right? If AMD was truly just behind NVIDIA, then why have we not seen for a long period of time free cash flow increase, right? Why was it just NVIDIA? The answer is pretty simple, because they are so far behind, or they were so far behind that, well, it just didn't make much sense to make that argument. But now maybe you could start making it. And then we have, of course, Intel right here, free cash flow negative, all those investments, losses, etc., etc. So yeah, that's not a great sight to see. But if you look at what happened before, right, back in the peak here, Q2 2020, I mean, Intel was generating $21.9 billion in free cash flow in the last, well, trailing 12 months, which was much, much higher than NVIDIA and AMD combined. And so a quick refresh on what has happened in Q3 for AMD. So we see here data center has grown by 122% year over year, or 25% quarter over quarter. Operating income increased 240% for that segment year over year, or 40% quarter over quarter. We've also seen growth quarter over quarter and year over year for the client segment. Gaming is still down, so that segment is not doing that great. But of course, I mean, no new consoles other than the new PS5 Pro. The rest, not that much. And then embedded one is up 8% quarter over quarter, but year over year, we're still seeing weakness that they've been telling us for the last, 2 quarters or so. Then let's talk a little bit about what was mentioned during the earnings call. Just 2-3 things I want to touch on. So, 1, we have successfully accelerated our product development pace to deliver an annual cadence of new Instinct products. Our next-gen MI350 series silicon is looking very good and is on track to launch in the second half of 2025 with the largest generational increase in AI performance we have ever delivered. Then, the MI400 series based on the CDNA Next architecture is also progressing well towards 2026 launch. As for the data center GPU revenue, that is expected to exceed $5 billion in 2024, and I think that bar has been set low-ish. I think they're comfortably going to exceed $5 billion. Remember, that's up from the $4.5 billion they guided in July and the $2 billion that they started with this year. Now, okay, that's a very nice increase to go from $2 to $5 billion, but I think the market was expecting more than that, especially for Q4. They were expecting a bit more. Let's see if 2025 can provide even more upside. It's also important to note that NVIDIA secures, that's a report, NVIDIA secures 60% of TSMC's double CoWoS capacity for 2025. The rest of the 40% is going to be split between AMD and the hyperscalers, basically all the other players. Then with regards to the supply chain, right? Are they also supply constrained just like NVIDIA? I mean, NVIDIA said if we could, we would have delivered more. If you look at NVIDIA's growth for data center, it's always growth for $4 billion or so. So it's either, well, we're going to see way more growth because of TSMC's increased capacity for next year, although NVIDIA did secure 60% of that. But still, if that's the case, if suddenly there's no problem with supply, or there's no problem with TSMC and demand is so high, then we should be seeing way more growth going forward. 25, 26 remains to be seen what happens. But the analyst here asks the following. I guess maybe building on the latter point that you just made, I'm curious of how you would characterize your supply chain having evolved, now talking about $5+ billion. How do we think about what you've been doing on the supply side, given the lead times, the production cycles of the MI300, MI325 GPUs as we look out into 2025? So Lisa Sawyer said, so look, I've been very happy with how our supply chain has ramped over the last number of quarters. Clearly, it's a tight supply environment, but we've done a great job ensuring that we have capacity across the entire supply chain. Again, that was part of the reason for the higher revenue in the third quarter around our Instinct business, just both customer demand as well as supply chain improvement. And going into the next few quarters, going into 2025, I think we expect that environment will continue to be tight, but we've also planned for significant growth going into 2025. And so we feel good about our overall supply chain capability. Now, of course, these are good comments. And now it's time to show the numbers, right? Now it's time to show that quarter over quarter, you can exceed the expected growth. I believe last quarter that was 17% or so. This quarter, it's expected to be a bit less overall revenue for the business. Year over year, that would be 22% year over year growth or so, which is better than the Q3 number. But the growth quarter over quarter, currently, if the numbers that they gave at the midpoint is about that, is going to be smaller, right? The Q2, Q3 growth, Q3 to Q4 growth is expected to be smaller. So yeah, remains to be seen. You get a premium, AMD gets the premium, right? But they have to deliver. They have to deliver these growth rates, the growth rates that we've seen with NVIDIA, despite NVIDIA being a much, much bigger player. Now that said, let's do a quick reverse DCF here. So like I said, we put here the free cash flow trailing 12 months, $1.556 billion. The terminal growth rate is basically what the market is giving us. This is the risk-free rate right now, which could change by the time you're watching this video. Then you've got the discount rate, which is basically this, the terminal growth rate, and the implied risk premium. You add that together, you get this number right here. You could add an execution risk if you want. And yes, I have a 2% dilution included here. Then the implied growth rate to justify today's price is 28.6%. So it will have to grow free cash flow by 28.6% for the next 10 years for this number to make sense. Now, what we've also seen is that the market is expecting free cash flow to be more than double this number, right, for 2024. So if we were to cheat and switch this number to the number that's expected for fiscal 2024, then the implied growth rate would be closer, just under 18%, which is, of course, a big, big difference here. And as we've seen, the company is expected to grow free cash flow much quicker than just 18% in the next 2 fiscal years. Of course, what will happen after that remains to be seen. But at the rate that they are expected to grow up until 2026, the number that we got there, the $9 billion or so, is already much bigger than the number that we have seen if we put in 18% or 28%, right? That will be reached by year 6 or so. Here, that will be reached by year 2.5. So much quicker. Now, if we currently look at the charts, it's not the greatest one, but definitely not the ugliest one either, because it's still respecting that uptrend line, right? It makes higher lows. There is still that downtrend line that it will take a while until we go through that. Maybe after the next earnings report. I mean, that could be quite an explosive move, but right now you can clearly see we are under the 20-day moving average. It did try to touch it. Well, got a little rejection here. Again, we're just Tuesday, but it's a shorter week because of Thanksgiving, so keep that in mind. But yeah, right now, I mean, as long as it doesn't go lower than this number right here, $130, I would say, then yeah, maybe it's worth it. Maybe it's worth picking up some AMD shares right here. What do you think? Worth buying AMD today? Not worth buying AMD today? NVIDIA, Intel, maybe Broadcom, Qualcomm, another player, right? What are your moves? What are you picking at these prices? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.